Okay, let's build a budget. Perfect time for the last quarter and going into a new financial year. Building a budget. I even do it, every year, and I do it around about the May time, ready for sign off in June and ready to implement by the 1st of July. So it's perfect timing for everyone to jump on and do this. All right, so, people say, why do you build a budget? And for those that have never built a budget, it's a great way to really understand your business and what it has done in the past. But overall, I always say to understand what your break-even point is based on fixed costs. If you know what your fixed costs are, you know what your sales your sales have got to be in order to cover that. Create your sales targets. For the sales team, or even yourself. If you know what your fixed costs are, you can gross it up to understand what what your monthly sales need to be. And when I say monthly, don't forget, some businesses are seasonal, so there's you can season those sales. I just remember there was one client who used to get sort of upset when she didn't make a sales number for the month, but then when we seasoned it, it took all the surprises out of it, which you'd like to take as many surprises as you can out of business. The other reason is manage the performance of the business at a closer level. So it just means then you can monitor month to month and understand what you can do, can't do, what you need to change, especially over the last 2 years where people were pivoting their business. People that were pivoting their business and knew their fixed costs, they knew what their sales targets needed to be because they'd already done a budget. It's a great tool for planning for growth and planning for changes when performance is not met. And most importantly, understand what you're going to be earning come 30 June. There's so many businesses out there that people are doing it as a hobby. Well, when I say hobby, it's because they're not actually taking out a payroll themselves. They pay everyone else and they leave themselves to last. But wouldn't it be nice to know that, you know what you're earning throughout the year, and especially when it comes 30 June. All right, let's get started. So the first part is, let's start with the expenses first. Now, if you were in my last session, I did say when you do this, split it up. So you've got your headers and your subheaders. And what I mean by that is your headers are administration, advertising. You can see them there on the list, but break it down. So it makes you look at your expenses and you can control those much better. I mentioned in the last session that, one of the common ones is software subscriptions. Now, if you were to break that up into computer and IT costs, all of a sudden you can see what you're paying month to month on those subscriptions, but and cancel them when you're not using them. That's what these software subscriptions are making their money on, is people that are forgetting that they've actually got them. But also, when you're ramping up a business and over the course of your year, if you know what you're building your team to be, at least you can put those costs in under, your recruitment costs, increasing your wages and salaries, and when does payroll tax going to click in for you. Again, also, depending on your payroll, your budget should be reflective of your weekly or fortnightly pay if you're not paying monthly. Throwing another week's worth of wages or another fortnight's of wages into a monthly budget makes it through. Don't just do the averages. That's just being lazy. All right. So first thing, overhead expenses, split them up and then break them out month by month, and then the total for the year. So the next slide is going over your budgeting the revenue and direct costs. Now, I did also mention, now, I am referring to the last session quite a bit just in this first bit, and it's because of the definitions of what I'm explaining here. Reach out if you do want a copy of the recording from last session just to refresh your memory. Otherwise, you can find it on our website as well. So what I mean by this is that if you remember the income, I said split your income levels. So whether in this instance, you've got IT services and IT hardware, split it up. And why I say split it up, because your direct costs need to be split up accordingly, because those margins on each of those revenue lines are going to be different. So you can't just work on averages and you can't just work on totals. It doesn't make any sense, especially when you've got different, services and products. If you're working on all these different margins, if you put your sales on an income line that generates 100% revenue, your gross profit's going to be, reflect very, very different. So make sure that you build this out in a way that you understand. And the way you can actually identify this is, how do you generate your invoices? Are the invoices, there's specific services or specific inventory items, specific products? From each of those, reflect on that and then understand what those direct costs are against that. All right, so, a good example here right now is I'm saying that direct costs are 50% margin on the IT consultants, 20% margin on the IT hardware. Very clear on those two lines. And so if you look at the gross margin is 34.9%, see how skewed that could look? So very, very important to do. All right, now, let's go into an example of a budget. I've just tried to give you a high level here of what it should look like. Of course, reach out anytime. Happy to help and happy to, if you've got a draft of one and you just want some feedback on one, just throw it at me and see what I come back with. So as you can see, the income, the cost of sales, the margin, and the total overhead expenses gives you an operating profit of $2,040 here. Now, of course, your budget is going to be quite extensive. Absolutely. And one thing that I do like to do is put it into your software. Once you've built this out, it just means then each month you can monitor how you're going. One thing that Xero does really nicely is that you could have your actuals for the past months and then add your forecasted budget in as well to basically give you your overall year with your actual plus budget. And then you can reflect on, what did you start with at the beginning of the year against a budget? Are you above your targets? Are you below your targets? What tweaks do you need to make as you're going? Looking at this on a month-to-month basis means that you've got your finger on the pulse here. You'll know what your key indicators are in your business. You'll know when your sales team are performing. You'll know when your costs are going up. Right now with a lot of the costs going up, especially with freight, I cannot believe that freight's just gone up through the roof as it is in the last 2 years. So, when you put your freight in, for instance, into your direct costs, all of a sudden your margins look very different again. And what do you need to do in order to get back to the operating profit that you had forecasted originally? Okay, unfortunately, it's probably increasing your prices. And right now you'd be increasing your prices on especially when you're looking at e-commerce businesses where their freight is through the roof. You would be looking at those prices every month at this point, unfortunately, but that's today's world. Okay, so right now, just keep this in your head, operating profit of $2,040 on this slide. Now, an area that I get asked, one of these big questions is, if I have a profit, then why don't I have this in my bank account? Oh my God, if I got $1 for every time that question was asked, I could be, sitting on the Bahamas right now. So let me explain the next piece of the puzzle, because yes, you just saw a profit in my last slide of $2,040, but guess what? It doesn't stop there. So in my next slide, it says here, this is what we do for our clients. It's the extra piece that we do, for our clients so they understand this. And that is account for the items that are on the balance sheet. Now, really confusing is that people go, well, you got your profit and loss, what's a balance sheet? And we'll go through that in a different session. And then cash flow. Because everyone sees that the profit should be, is what's sitting in the bank. In actual fact, it's not going to be. And the reason why we add this into a budget is because there are various items in the balance sheet that actually need to be accounted for. So the good example is in the next slide, you'll see in the operating profit, I just said $2,040. Now, the balance sheet items that give you your cash position is the balance sheet has your accounts receivable, so customers that owe you, they owe you $5,000. Your creditors, your suppliers, you owe $10,000. A car loan, the cash component of that is $400. GST payable. So total cash movement is actually negative $6,000 here, but your cash position is actually going to be minus nearly $4,000. So, you see that your profit and loss in your budget is just over $2,000. You've done your budget, done it month to month. Underneath that budget, add all the things on your balance sheet that you need to pay out underneath that, because that will give you a cash position. When people say, oh, well, I've got 100,000 sitting in my bank account, and I ask, is that your true trading position? Most of the time it's not, because how common is this? And this is why I get this question asked all the time, is 100,000 sitting in the bank account, and then all of a sudden the BAS turns up, your quarterly BAS, that's $100,000. Guess what? All of a sudden, you've got nothing left in the bank. And this is the reason why, is because the cash items on your balance sheet haven't been accounted for to give you a cash position. So, when you look at your budget and you look at what your income is, say it's $100,000 a month, if your receivables pay you normally 30 days, account for 100,000 in your cash position here, in your cash movements. Have that up your sleeve. One of the other areas is that I'd like to do is every month move the GST, move your taxes, move your employee taxes into a separate account, because that is going to be closer to your cash position. Hope this makes sense to all. And of course, if there's any questions, feel free to ask, because it can get quite confusing, because you're dealing with a budget, you are dealing with a profit and loss, a balance sheet, and your cash flow position. All right, then a reminder on why we should have a budget. So, having a budget equals good planning. I said, I don't know actually how people can travel through business, year on year without having a budget. There are so many nuances around different businesses, different margins, especially resources right now. You're having to pay more in resources, so account for that in your budget. Allow for a 5% increase or whatever that might be. I always like to say that, in May, June time, I like to see what it looks like come 30 June of the following year. Okay. The business can be more agile when planning for change, which might be growth or perhaps there is a change in industry. Also, a good idea is to have a rolling 12-month budget. This keeps you in check. And what do I mean by that? So a 12-month rolling budget is, you've created a budget from the 1st of July to 30 June. Come around Christmas time, in the last 6 months of trading, there might be some changes within your industry, or there's some changes with resources or whatever it might be. Look at your next 6 months. So because you're at Christmas time, your budget's taking you to 30 June of that year, for that financial year. Tack on another 6 months. So your budget at Christmas time, say it's Christmas 22, your budget now will take you to December 23. It just basically keeps you in check with your numbers. It helps you understand your cash flow, especially when taxes come due. As I just mentioned, I always like to have it in a separate account. Your break-even sales number. Well, from a budget, if you've got a sales team, at least that you can give them an idea of, what does their sales numbers need to look like from a sales perspective, but you yourself will know what the break-even number is, whether you're going backwards or not. A budget just makes it easy to understand your numbers. No surprises. I hate surprises. So I hope that was informative. I know it's a really short, sharp session, and I hope that you get quite a bit out of it, and you can probably implement some of this yourself. And again, feel free to reach out if you've got anything you'd like a second opinion on, or questions around it. And is there any questions? So thank you, Stuart. Why is accounts receivable and supplier costs in balance sheet not included in the P&L? It actually is included. So what I'm saying, in your P&L, it's if your accounts receivable and your suppliers, so all your money's come in, you've paid everything within that month, it would have given us a $2,000 profit. But it doesn't happen that way, does it? It actually, there's always people that are still owing the business, and we're still owing at the last day of the month. So you got to account for those movements. I'm basically using the profit or loss on an accrued basis. Now, let me just define what an accrual versus a cash. So accrual means then when you're invoicing or when you receive an invoice within the month, it's been accounted for. What a lot of small businesses do, which I discourage, is that they account for their suppliers when they pay the invoice. That doesn't give you a really true reflection of what happens within the business itself for that month. You're only just deferring the cost into the following month. Especially when you have, I'll go back to the IT services again. You raise all these invoices of 100,000 to your customers, but you've got contractors of 50,000, for instance. Now, if you don't account for them in the month that you've invoiced, it means that your margin is going to be incorrect. And if you move that cost when you've paid for it in the following month, it's really going to skew your accounts for that month, and your profit is going to be incorrect. Hopefully I've answered your question, Stuart, and please feel free to reach out if it doesn't make sense. But your P&L, your budget is on an accrued basis, and the cash movement, I'm just adding in and out of what comes into the bank and is leaving the bank at that time. Pleasure. we've got a couple of minutes, so if there's any other questions, please feel free to reach out. I think, we've got a BAS period that is about to close out March quarter, and I always get the questions again. I think it happens every quarter, when my team send out the BAS, what is due? And a lot of clients, we try to give them as much notice as possible because a lot of people are using their trading account as an indication of how they're trading. But, I do, most of our clients here that we look after, we move that money into a separate account. So, their trading position in their bank account is a true reflection. And hopefully I can encourage all of you to do the same because, these BASs, they come up before you know it. They're just around the corner again. And, we've got the year end about to come up. So, I have to say in some of their businesses over the last 2 years, I've seen some really healthy profits. And you know what that means? There's going to be a really healthy tax bill to pay. And again, you might want to provision what your profit position is that you would put 25% of that into a side account to account for your taxes. That's probably an overestimate because you haven't included depreciation, but I just call that a sort of a buffer or savings that you've been able to work out. Question from Max is, do you have any tips or tools to track and keep to the budget after you set it, text platform or Excel model? Thank you, Max. The one I do use is in Xero. So if you put your budget into Xero, it will give you the, basically you can account for your actuals and then it'll give you the, include the budget for the next however many months. So you get your total. So that's one of them. The other one is in both MYOB and in Xero, you actually can do your budget versus actuals each month to monitor how you're going. We try to use, the software. If we've already got the numbers in the software, why not use it that little bit more? Because most people only use probably 50% of an accounting software, whereas we will try and use as much as we can to simplify. And when we start getting into Excel, that's when human error can come about, when you've got formulas that are not adding up and, just human error you can make in Excel. But if you can use your software, absolutely. And again, reach out. If you're not really sure how to use the likes of MYOB or Xero to put your budgets in, feel free to reach out to me. Okay, I think we're time. So thank you again for joining today's webinar. And we've got our third session, which is in May the 17th, and it will be cost to consider when employing staff. When I'm doing budgets and I'm explaining to people, okay, you part of your growth plan is to employ people. What are the costs that you need to consider as you're going into that new year? I think, especially next year, I think there's going to be considerable growth in many businesses. Thanks, guys. I hope you enjoyed the session, and we'll see you again next time. Bye for now.